Hi folks, this is Sean Hyman from Chart of the Day, and I want to talk to you about something that really makes people scratch their heads, and experience has taught me this. And what I want to talk to you about is when currencies don't act like they're supposed to, go off of what they are doing and not what they should be doing. And what do I mean by that? Here's a prime example. For the longest, and this is a yearly chart, goes back a year. It's a daily chart, goes back a year on the pound dollar. The pound has been selling off, selling off, selling off, selling off, and as it should. The Bank of England has led the way in quantitative easing, which is the excessive printing of money. And you almost wonder sometimes who's winning the race, them or the Fed, when it comes to the printing of money. And they've done far more rounds of it far later, even than a lot of central banks. So most central banks of the world supported their economies by providing a ton of stimulus to their economies. A lot of that in the form of printing of money and putting money out into the economies. However, a lot of countries shut that off, months ago, 3 to 6 months ago. And the Bank of England still, even recently, as of this past week or two, has mentioned quantitative easing and still continuing that and still continuing the stimulus. Well, every time before that's happened, you've gotten another wave down in the currency pair, and so it would rally up, and then the BOE Governor King would come out and make another quantitative easing speech, and down we'd go again. But what I started noticing is in his last round of quantitative easing talk and continuing the stimulus talk, this thing rounded up and headed higher, and it has been setting up higher lows. Here was your ultimate low here. Here was your first higher low. This was set up and was rallying into his talk about quantitative easing and about continuing to stimulate their economy. And the pullback was light. It was small. And this most recent low is still higher than the previous low. So you've got higher low, higher low, higher low, and these highs are getting higher here. We've had a technical level, these highs, these highs, these highs, and these highs have all been breached now. This one was like a little fake out that dipped back down. And now we've got the pair heading higher, and it's cleared above all of this. And so a lot of traders, really scratch their heads over this because from a fundamental perspective, this should be tanking. And in all other times, it has. And so when you finally get to a point to where the technicals start to contradict the fundamentals, and believe me, that's really not all that often. I know a lot of technical traders will tell you that, but it's really not. Then what you should do is, in those cases, you should go with the technicals, because that's what the pair is doing, and you should not factor in the fundamentals, because people are starting to discount the fundamentals at that point and the impact of that. So what does that mean? That means that you've had all the effects of quantitative easing priced in for now. You've had the pair bid up by more buyers than sellers. You've had it bid up to where buyers are coming into the market quicker. So each time it's getting sold off, buyers are jumping in there and buying up the pound dollar quicker. So here's where they put it in the bottom. It pulls back. Buyers come into the market, and picture buyers coming in and rushing in and buying it up quicker. So it sets up a higher low. It pulls back again. Buyers rush in and buy it up even quicker. They don't let the price drop down even further. So these are bullish signs, bullish formations as these lows pick up and get higher. It really becomes bullish once you take out these highs that have served as resistance here, 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 and here, and you close the candle above all of that. Then you clear the path to take out these former highs and then some. So I would say to look for pound dollar to head higher. And this is one of the reasons why I had us in the pound yen currency cross trade in the cross trader service here recently, is because the strengthening of the pound that I saw against the dollar, and that same strength was flowing over into pound yen as well. And as many of my subscribers know, the crosses tend to move more than the majors do. So when you see a theme like pound strength, Many times you can enact that through currency crosses a whole lot better and get more pips and more of a trend out of the pair even than you can off of pound dollar, which is called one of the majors. So as we see higher highs push through for pound dollar, we're going to see that follow through even more so with pound yen and some other pound crosses as well that we'll be trading in the currency cross service. Thanks so much for watching.